Hello everybody, this is Lara at Pure Elliott Wave with your weekly analysis for the gold cash market for the trading week ending Friday 5th of November 2021. We've got upwards movement. I was expecting downward movement. We've got upward movement, but it's remained below the invalidation point, which is reasonably close by. But it's prompted a changing of the labelling of the preferred bearish Elliott Wave count. I still have a bearish count and a bullish count. The situation with classic technical analysis, the market, or both the weekly and daily charts, look mostly neutral, leaning slightly bearish. Elliott Wave analysis first, classic analysis last, and I've got something possibly rather controversial to go through this week. In Elliott Wave terms, that is, if you want to get really geeky. At the weekly chart level, this is still my preferred wave count, but I'm relabeling mine primary wave 2. At the quarterly chart level, the bearish Elliott Wave count sees a huge expanded flat unfolding. Here's an expanded flat at a smaller degree, not a very typical looking one, but it illustrates one of the important points of an expanded flat. A, B, C, and B moves beyond the start of A. What's not typical about this one is C does move beyond the end of A, but it usually moves further beyond the end of A than that, hence the term expanded flat. At the quarterly chart level here, supercycle B has moved beyond the start of supercycle A. That's exactly what happens for a B wave within an expanded flat, and expanded flats are quite common structures. So, at the quarterly chart level, this wave count follows a common structure and expects for grand supercycle 4, which is the expanded flat, for it to have a normal duration. So, at that time frame, it actually has a pretty good look. It's another reason why I continue to publish it. If B ends there, then C begins here, and supercycle C may only subdivide as a 5-wave motive structure to be labelled at cycle degree 1, 2, 3, 4, 5. Cycle wave 1 looks like a very good leading expanding diagonal meeting all Elliott Wave rules. Cycle wave 2 following it is a deep zigzag, a deep correction of cycle 1. Second waves following a leading diagonal in a first wave position are commonly very deep, and so that guideline is met here. When 2 ends, 3 begins. 3 may only subdivide as an impulse to be labelled at primary degree 1, 2, 3, 4, 5. The target for 3 is for it to reach 2.618, the length of 1, at 887. This fits with the lower target for supercycle C to reach 1.618, the length of supercycle A, at 657. That's a common Fibonacci ratio between A and C waves within an expanded flat, and it would see supercycle C move beyond the end of A, avoiding a truncation and a very rare running flat. A is that low in December 2015, I think 1046 or 1047. Within cycle wave 3, it may only subdivide as an impulse. Primary 1 may be over here. Primary 2 may be continuing sideways as a double combination. Double combinations are quite common structures. The first structure in the double is an expanded flat labelled intermediate wave W. The double is joined by a 3 in the opposite direction labelled intermediate wave X, and the second structure in the double may be a zigzag labelled intermediate wave Y. One flat and one zigzag are the most common two structures in a double combination, which is a fairly common structure. So this follows a common pattern so far. Draw a base channel around the start of supercycle C. Draw the first trend line from the beginning of cycle 1 to the end of cycle 2. Place a parallel copy on the end of cycle 1. I will expect fairly strong resistance at the upper edge of this channel. That would see intermediate Y end about the same level as intermediate wave W. It will achieve its purpose of taking up time and moving price sideways. To achieve the purpose of moving price sideways, W and Y usually end about the same level. Let's take a look at this at the daily chart level from this high here labelled cycle 2, which is this point here. Within cycle wave 3, primary 1 is an impulse. Primary 2 may be continuing as a double combination, expanded flat for intermediate W, zigzag for intermediate X, zigzag for intermediate Y. Within X, minor wave A is extended and minor wave C is short. I've had some rather odd comments about extended A or C waves, mostly on the YouTube channel recently. Some people seem to have a problem with it, which I find very odd indeed. The concept of extending waves within Elliott waves is absolutely normal. We see waves extend within impulses all the time. It's absolutely normal for either an A or C wave to extend. They do have a more common tendency to be equal or close to equal in length, but that's a guideline, not a rule, and sometimes one of them is an extension. This is absolutely fine. Now we get into the controversial part of this Elliott wave count. Within intermediate Y, I'm seeing minor A as a leading expanding diagonal, minor B a little double zigzag, and minor C probably a short impulse to find resistance at the upper edge of this base channel, which I'm copying over from the weekly chart. So far so good, nothing controversial there. This has a really good look. This is the controversial bit. The leading diagonal of minor wave A doesn't actually meet all Elliott wave rules. Now I know this is the first time I have ever done this, published a wave count which doesn't perfectly meet an Elliott wave rule, but I'm going to explain why I'm going to do this, but I do this with a really strong caveat. When you look at the way I've labelled the structure, it really has a really good look. One of the features of diagonals and triangles, which are somewhat similar structures, and they have their classic technical equivalents in triangles and wedge structures, is they like to test their trend lines. This lower 2-4 trend line has tests here and here and here. The upper 1-3 trend line nearly has a test here. And the proportions between the waves are really good. The trend lines diverge. It all has a really good look. This is how I want to label the structure, but within an expanding diagonal, 3 should be longer than 1, it is. 4 should be longer than 2, it is, and 5 should be longer than 3, it is not, by a very small margin. 3 is the longest out of 1, 3, and 5. For many years now, I've seen pieces of movement that could see a diagonal either expanding or contracting labelled where the third wave could be the longest out of 1, 3, and 5, not by a great difference, just a little bit. I've always found another way of labelling it up to now which meets all Elliott wave rules and also has a pretty good look. But I've spent quite a lot of time on this piece of movement all around here trying to see different ways of seeing X ending up here, Y beginning here as a flat, or within Y, A beginning here, A ending here, B and C an expanding diagonal. It will fit and meet the rules, it just really doesn't look right. This has a really good look. I have for a long time suspected quite strongly that the rule for wavelengths within diagonals could be slightly adjusted to state that occasionally a third wave within a diagonal might be the longest, and that would absolutely fit with third wave behaviour and tendencies. They do have a tendency to be the longest, strongest piece of movement. The reason why I'm not so comfortable publishing this today is I think if a rule needs to be adjusted or rewritten, it should come with a solid body of data to support that, and I still haven't finished my research that I'm halfway through, and I cannot provide you a solid body of data. So strong caveat with that wave count, but that's my explanation. I do have another one that does meet all Elliott wave rules, but I really wanted to publish this because it has the best look. Anyway, I expect we're probably very likely to find quite strong resistance at the upper edge of this base channel. If that happens, if price comes up, it could slightly overshoot, but if it turns quite strongly and we start to see strong downward movement, I'm going to have more confidence in this wave count. But technically, primary 2 may not move beyond the start of 1 above 1915.42. If it does find resistance at the upper edge of the base channel, then intermediate Y will end pretty much at the same level as intermediate W. The whole double combination will have a really typical look and would achieve its purpose of taking up time and moving price sideways. At the weekly chart level, this is an alternate wave count, which is also bearish. It considers, instead of cycle 2 being over here, if we move the degree of labelling in this zigzag down 1 degree, this could just be wave A with an irregular flat correction for cycle 2, labelled A, B, C. Let's look at the start of C, because this is slightly problematic. This low down here is this point down here. The problem here is now within primary C. No problem here, a leading contracting diagonal for intermediate 1, which meets all rules, including the rule for wavelengths between 1, 3 and 5. A zigzag for intermediate 2, no problem here. The problem is within intermediate 3. Intermediate 3 may be extending, no problem there. It's the proportion within these corrections at the early start of this movement. We may see minor 1, 2, then 1 degree lower, minute 1, 2, 1 degree lower, minuet 1, 2. The problem is that minuet 2 is longer in duration and takes up more space than minor 2 and minute 2, 1 and 2 degrees higher. The lower degree corrections are getting bigger and taking up more space than the higher degree corrections. Now that sometimes does happen when third waves extend and they start out relatively slowly, so it's absolutely acceptable. It just at this stage for this part of intermediate 3, it just doesn't have as good a look as that first wave count. But I will publish a daily chart for the bearish wave count because this is the wave count that meets all Elliott wave rules perfectly. Moving on, now the bullish wave count. If your own analysis for gold is bullish, you may choose to use this as your Elliott wave pathway to support your decisions. This wave count expects that the bear market for gold was over at that very important low in December 2015, and there the bull market resumed. The bull market start is labelled as an impulse for supercycle wave 1. Within it, cycle 1 and 2 are complete off to the left of the chart. Here's the end of 3. 4 could be over here as a triple zigzag, and 5 may have begun, with primary 1 and 2 complete and primary 3 beginning, with intermediate 1 and 2 complete and intermediate 3 beginning. This is now a very bullish wave count. Within cycle 5, primary 2, if it's continuing sideways, may not move beyond the start of 1 below 1677.64. At the daily chart level, here's the end of primary 2, intermediate 1, intermediate 2. We can label this also as a double zigzag. That's possibly a better way of labelling it than I have for the previous charts as a single zigzag with an extended A and a short C, but both are absolutely valid. Intermediate 2, either way it's a corrective structure. 2 is over there, 3 begins with minor 1 and 2, minute 1, 2, minuet 1, 2. This wave count also suffers from the problem of proportion. Minuet 2 looks bigger than minor wave 2, although they are actually equal in duration, both lasting 8 days, but minuet 2 at 8 days is a lot longer than minute 2, 1 degree higher at 2 days, and it takes up more space than minor wave 2. So it doesn't have as good a look as the other way I've labelled it on my first daily chart, but this meets all Elliott wave rules. This wave count expects a third wave up at multiple degrees is in its early stages. It expects quite a strong increase in momentum. We should see a break above resistance, which is pretty strong up here, imminently early next week if this wave count is correct. So if your own analysis is bullish, these last 2 strong upward sessions suggest an upward breakout very, very soon. The next target is 2078. Okay, classic analysis. Oh no, we don't have one more chart. Okay, classic analysis now. I'm not going to publish that alternate for the bullish to try and keep the number of charts manageable. I will still keep charting it though. If any members really want me to publish it, I'll put it in comments for you. Let me know down below. At the weekly chart level, this week we have a fairly strong green candlestick. It has pushed from volume. Prices closed near highs for the week, and there's a long lower wick. This is all quite bullish, suggesting an upward swing to resistance is very likely to continue. Price is consolidating though, with pretty strong resistance about 1835 and really strong support below at 1675. A little bit of a support and resistance zone about 1800. I should probably remove that because it's so weakened now. So resistance 1835, support 1675. ADX says there's no clear trend. Stochastics didn't quite reach oversold down at this support here, but it's moving up through neutral, trending up toward overbought. Let's expect price is likely to continue higher until price reaches resistance and stochastics reaches overbought. If that happens, then when price gets up here, it'll be really important how price behaves. If it can close above resistance on an upward session with support from volume, that would be a very bullish signal. I would then expect energy to be released to the upside and an upward movement to continue. Next resistance would be at about 1925, and then above that quite strong at 2100. But we're not there yet. It's still consolidating. So this chart is overall neutral. On balance volume is also within the range, fairly weak, but that too is consolidating. RSI neutral, been over ADX and stochastics. ATR declining as price moves sideways when it consolidates, absolutely normal behaviour and supports the view that price is consolidating. At the daily chart level, here's strong resistance at 1835. Support fairly strong at 1720, below that very strong at 1675. Friday session's really strong. Prices closed very near highs for the session. The bullish long lower wick and push from volume quite strongly suggest more upward movement early next week. But look out for really strong resistance at 1835. Again, if price can close above this point on an upward session with push from volume, that would be a very bullish signal. In the first instance though, look out and expect resistance there. A weak bullish signal from on-balance volume really shouldn't give that much weight. ADX at both time frames declining. The DX lines here whipsawing. Absolutely normal look for a consolidating market. RSI and stochastics neutral. Stochastics reaches oversold here as price reaches support about 1720. Price is moving higher. Stochastics still got a little bit of room to go before it reaches overbought. It did get overbought here. Price did reach resistance here, but this area is just now so weakened. So overall, I'll expect upward movement next week to about 1835, which, considering that trend line on the main daily Elliott Wave count, could be a little bit optimistic. That's all from me at the end of the week with your gold analysis. I hope all our members are looking forward to a fantastic weekend.